All right, welcome back to the Mortgage Motivation Podcast, and I'm Gary. And this is the third video of our three-part series speaking about the VA home loan. The first video we did was just discussing the 6 benefits of using the VA home loan, like 6 things that I really love about it. I didn't do 5, I didn't do 10, I did 6 just to be different, right? So I did it 6 benefits of using the VA home loan. The second video I did was using the VA home loan for a primary residence. So this video is going to be the third one, and I'm going to show you how you can purchase this as a primary home and convert it into an investment home. So you can't use the VA home loan outright as an investment loan. You can't. There's no such thing as that. It must remain a primary residence. And I will break down and show you how that all works out if it's done the right way. So like one question I get all the time is, Gary, can I purchase an investment property using the VA home loan? And the short answer is no. It must be a primary residence. So we're going to go over how that works. So for an example, if you're looking to purchase a duplex or a triplex or a quad, you can do that using the VA home loan. A lot of people do not know that. They think that it must be a single family residence or a condo or a townhome. And yes, you can use that for those items as well. But you can also use it for your duplex, your triplex, and your quad. And by doing that, you get an opportunity to move into one of the units and then use the others as rental income. All right. So don't forget, the VA home loan is 0% down, 100% financing. Now you can put down a down payment if you wanted to, but it's not mandatory for most people. So this depends on the scenario, but for most transactions, it's 0% down. So I wanted to walk through how that will look for you. Okay. So say for an example, we have Sergeant Michelle Brown. Just make up a name. Michelle just retired out of the military and she's a nurse and she's looking to purchase a property. So Michelle moved to Maryland, follow me here. She moved to Maryland right outside of Baltimore and she's looking to purchase a property. But since she's single, don't have any kids, she's looking to buy a property, but she's like, you know what? Since I don't have any responsibilities, this may be a great opportunity for me to buy a home, use my VA loan. So what she decided to do was buy a quad. So a quad means 4 units. So she's right outside of Baltimore and she's going to move into one of the units. So 1 unit she's going to move into, and the other 3 she's going to rent out. So the house is, she bought it for $300,000. So the numbers don't matter right now. I just want to give you an example. So just say she bought the house for $300,000. All right. So $300,000, and I'm going to make up a mortgage payment, and I'm not going to get into rates or anything like that. But say her payment is $2,500 a month. All right. So like I said, she's renting out. It's a 4 unit. So 1 unit she lives in herself. And then you have a 2nd unit, a 3rd unit, and a 4th unit. And the reason why I'm not writing this on the whiteboard because I'm doing this on audio, so I want to make sure everyone is following me. So the total property is $2,500 a month. But say she rented out each unit was $1,200. All right. So if you add the 3 units up, that means that her rental that she receives every single month is $3,600. $3,600, right? Now don't forget, a mortgage payment is $2,500. So if you do the math on that, so she's going to receive $1,100 a month in positive cash flow. See, I automatically start to deduct 25% off of that. So forgive me on that. So yeah, so she's going to get $1,100 a month of positive cash flow. And what I did, guys, I took the $3,600 and I deducted the $2,500. So that leaves her with $1,100 that she's going to make off the property every single month. So you see what happened there. So she owns a property, but she's not paying a mortgage. There's no mortgage for her to pay. So she's getting $1,100 a month for that property. So say that she lives there for 2 years and Michelle decides to move because she's getting married, have a baby on the way, and her and a husband is looking to purchase their property. So Michelle is going to move out. So she's going to move somebody into that property. So that's an additional $1,200. So if she was receiving $3,600, stay with me here, guys, and she added an additional $1,200, that means that her cash flow is going to be $4,800 a month. Right? $4,800 a month. Yep. So $4,800 a month minus $2,500 is $2,300 that she's going to make, because you have to remember she still has a mortgage payment. So when you use the $4,800 she's receiving, you want to take away the $2,500, and by you doing that, you're going to get $2,300 a month. So let's look at it, how much she'll make in a year. So $2,300 times 12 is $27,600 a year. So I'm gonna put that all to the side. So $27,600 a year that she's making off of this property. Now keep in mind, guys, I'm using the $300,000 purchase property, and more than likely the rent is gonna be more than what I'm giving you. I just want to use simple math here. So $27,600 she's gonna make off of those properties, and she's a nurse. So Michelle makes $100,000 a year, and I know you guys make more than that. So in total, she's gonna make $127,600 a year, and she's not even making a mortgage payment. This is what she's making. This is a positive cash flow. Now, to get technical, you also want to take about 25% off of that for maintenance issues with the home. Something's going to happen with the house, no doubt. And so you could deduct that. But when you put that on your taxes, there's a lot of these items going to be tax credit and tax deductible as well. So you want to speak to your accountant about that. But let's not get too deep into that part. I'm not a tax guy, so you talk to your tax person about that. Just trying to give you simple math and show you how you could put this in place. So $27,600 she's making off of this property every single year. Does not include inflation. So as the house continues to increase in value, inflation goes up. She's building equity in that property. She has an asset. And not only that, since she makes $127,600 with the new property that she's looking to purchase, is going to increase her value there. So that's going to help lower her debt ratio. So we spoke about the debt ratios, and we understand how that works. So that'd be great. So because she's lived in there for 2 years, so she can use the income. And there's ways around the 2 years, guys. Sometimes some people get so technical with things. I'm just using this as an example. She lived there for 2 years, and so she could use the $27,600. So that by far is great. And like I said, she has an asset. She's purchasing a new asset with her new primary home. And depending on what she moves to, she only used $300,000. So there's a chance she still can use her VA loan with the new purchase. So don't forget, yesterday we spoke about that. Not yesterday, but the second video. We spoke about that. That it all depends on how much entitlement that you have with your VA home loan. So you see what we're doing there? So with the VA, you're still able to own a rental property, rent out 4 units. And of course, you can do a duplex, a tri, or a quad. But this example, we're using a quad. And no mortgage payment for her because it's been paid out by the rental she's receiving every single month. And she's making almost $30,000 a year. So that's just this example. So more than likely, she's going to make more than that. And there's a higher chance too that the property that she's going to buy is going to be more than $300,000. But just for simple math, I just want to show you how this all works out and why I get so excited to teach people how to do this. I have 3 people right now that's using a VA loan to purchase a property using this strategy. So they're single. So if they're looking to use the other units, if they buy a multi-unit, then why not do that? It makes nothing but sense to me. You could do a single family residence, but you're not going to receive any type of positive cash flow here. And I just think this is a phenomenal way of doing it without putting any money down. So when y'all hear people, oh, I don't have any money for a down payment, I can't do this, I want to have an investment property, I want to be an investor. There are ways of doing it. You just have to look at the different strategies that are available. And this is one of them. And you can do the same thing with the FHA loan. It's just a 3.5% down payment. Same concept. There's a few different differences that's there, but we're not getting into that today. But that's the best way of doing that. That's all I want to discuss with you guys. I wanted to make this scenario as realistic as possible and give you an idea of what it would look like for someone to purchase a property using a VA home loan. Like I said, one of my favorite things to do with the VA home loan is allowing someone to move into a property and become a landlord without putting any money down. And to me, I think that's just a great plan to have. But if you have any questions, just drop it down in the comment. Don't forget to subscribe, guys. I know this brand new channel that I have here, a lot more that's coming out, a lot of other ideas I have. We're going to start doing some interviews here soon. But this is the end of my 3-part series of just a basic introduction into the VA home loan, 6 benefits, using it as a primary residence, and secondly, how you could become a landlord by using a VA home loan. Make sure you subscribe, click that notification bell, and let's take it from there, guys. Look forward to seeing you next week.